Everyone knows about oil-rich governments and billionaire royals shaping the Middle East. But there's one family that's been quietly playing a different game. They lost billions in the Credit Suisse collapse and barely flinched. They turned a Visa investment into a fortune. They brought Coca-Cola and Burger King to an entire region. And chances are, you've never heard their name. This is how the Olayan family built an $8 billion empire under the radar. Launched in 1947 by a self-made Saudi entrepreneur, the Olayan Group grew from a humble trucking outfit in Dhahran into one of the most powerful private enterprises in the region. Along the way, it became the gateway for Coca-Cola, Burger King, and Kimberly-Clark in the Middle East. At the same time, it became a major global investor with offices in New York, London, and Singapore, and stakes in companies ranging from Occidental Petroleum to Visa. Today, it employs over 35,000 people worldwide. In 2016, the Olayan family was ranked the Middle East's richest, with a fortune estimated at $8 billion. And yet, most people outside the region have never heard of them. So what does it take to build a global business empire from scratch in a desert kingdom that barely had an economy? How do you stay relevant for 8 decades through oil booms, busts, and financial crises? And what happens when your low-profile family firm suddenly finds itself at the center of global finance? Sometimes on the winning side of deals and sometimes on the losing end of history? This wasn't luck. This was design. The story starts in the late 1930s. A young Saudi named Suliman Olayan loses his parents early and is raised by relatives. He studies English at an American school in Bahrain and lands a job at Aramco, the Arabian-American oil company. For 10 years, he works as a dispatcher, basically a middleman between American oilmen and Saudi authorities, and he learns something invaluable: timing, trust, and how to bridge two very different worlds. By 1947, oil is booming. Suliman takes out a loan against his house. Think about that. If this failed, he'd lose everything: his home, his credibility, his future. He launches the General Contracting Company, a small trucking business. His first big job? Hauling pipes and equipment across the desert for the massive Trans-Arabian Pipeline project. By 1950, he has 150 trucks. What started as a one-man startup is now critical infrastructure. And this was bigger than just hauling steel. It was about proving that a private Saudi company could deliver in an economy dominated by foreign corporations and the state. When the pipeline wrapped up, Suliman faced a choice: shut down or pivot. Most would have cashed out. He didn't. In the 1950s, he moved fast. He helped launch one of Saudi Arabia's first power plants. He co-founded the kingdom's first public utility. He started the General Trading Company to import consumer goods, bringing in everything from canned foods to refrigerators. Then tragedy struck. 2 of his drivers were killed in an accident. Suliman realized Saudi Arabia had no commercial insurance industry, so in 1954, he launched Arab Commercial Enterprises, introducing insurance services to the kingdom for the first time. This wasn't just humanitarian, it was strategic. Insurance meant recurring revenue, predictable cash flow, and protection for his own operations. By the end of the decade, Suliman wasn't just a trucking magnate. He was in power, insurance, and consumer goods, and he was already thinking global. In 1959, he opened an office in Beirut, then the financial hub of the Middle East. By the 1960s, he was buying stocks in New York and London. He locked down exclusive deals to distribute global brands like Kimberly-Clark, General Foods, and Cummins engines in Saudi Arabia. If you used Kleenex or drank Tang in the Middle East in the 60s, it was thanks to Olayan. This wasn't random. It was a deliberate strategy. Don't bet on one industry, spread the risk. Oil might crash, politics might shift, but if you're diversified, you survive. By the 1970s and 80s, Olayan had built a reputation as the go-to partner for global brands entering the Middle East. In 1988, 2 big deals changed everything. First, Olayan reintroduced Coca-Cola to Saudi Arabia after a long absence. That same year, it became the exclusive franchisee for Burger King across the Middle East. If you grabbed a Whopper in Riyadh or Dubai in the 90s, that was Olayan. But they didn't stop there. They were investing abroad with stakes in First Chicago Corp, Donaldson Lufkin and Jenrette, Occidental Petroleum, and later blue-chip companies like Visa. Their international investment arm, based in Liechtenstein, grew into a multi-billion-dollar portfolio of stocks, private equity, and prime real estate. By the 1990s, the Olayan Group was running consumer goods, retail, restaurants, and industrial services at home, while managing a global investment fund abroad. It was a multinational conglomerate in all but name, and it was still 100% family-owned and private. No public markets, no quarterly earnings calls, just long-term plays. And here's why that mattered. When crises hit, public companies panic. Private companies with patient capital can wait, buy low, and outlast the storm. Suliman passed away in 2002, so his children stepped up. Lubna Olayan became CEO of the Saudi investment arm, and later the first woman to chair a Saudi bank. Hayat Olayan ran U.S. operations. Khalid Olayan became chairman. The second generation carried forward the family creed, patience, partnerships, and privacy. In 2008, when markets collapsed and everyone was selling, they bought into Visa's IPO. That stake became a goldmine as digital payments exploded. They snapped up prime London and New York real estate when prices cratered. But even masters make mistakes. By 2023, Olayan was a major shareholder in Credit Suisse when the bank imploded. They lost billions. It was one of the largest private losses in recent financial history, a brutal reminder that even patient capital can get caught in systemic shocks. But diversification kept them standing. Their Middle East operations kept generating cash. Their global portfolio stretched far beyond one bank. This is the power of not putting all your chips on one bet. Today, the Olayan Group is still family-owned, run by the second and third generations. They've expanded into healthcare and tech and professionalized operations. But their real advantage is the same as it was in 1947, playing the long game. You don't need billions to think like this, just the discipline to diversify and the patience to wait when everyone else is panicking. In a world obsessed with hype cycles and fast exits, Olayan shows that sometimes the most powerful companies are the ones you don't hear about. No headlines, no hype, just 80 years of quiet, relentless execution. Still standing, still private, still playing the long game.